morning and welcome to Morning Trade with Money Control. I'm Karunya Rao, and over the next half hour, I'll help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your stock queries. So please don't stop commenting on our live feed. We'll have your questions addressed by our expert towards the latter half of the show. But before we kickstart, let's try and see what the global trade setup looks like right now. Europe, well, it was another weak session there. Markets closed lower following another choppy trading session as global markets struggle to recover from recent volatility. Stocks correct on Wall Street ahead of the US jobs data report for September. Major averages, though, remain on track to post their best week since late June. Asia-Pacific stocks open lower on a weak handover from Wall Street. SGX Nifty also signals a lower start for the Indian market. On the show today, we uncover the key triggers fueling demand, volumes and realization for paper stocks. Also in the spotlight will be Titan, Dabur, Equitas Small Finance Bank and Rategain. All right, let's get going and talk about the markets with Ashish Chaturmota of JM Financial. Morning, Ashish, and thank you for joining in. Ashish here tracks the markets from a fundamental as well as a technical perspective. So great to have you on board. Will be an exciting episode today. Ashish, before we talk about individual stocks, want to know what the market trends are telling you, what the technicals are telling you. Will we continue to sort of gyrate in this fashion, or will it finally come to a halt anytime soon? Can you foresee that?
Hi, good morning, Karunya. So good to join this show today. So in the last couple of trading sessions, we have seen a good recovery in the market exactly from the 200 moving average, which was close to around 16,950 trajectory. From there, we have seen some good recovery, and now in yesterday's move, we have closed around 17,300 again. Closed above an important resistance point, which was around 17,200. So it gives us two important data points. First, we have reversed from important moving average support, which is a 200-day moving average, and in the immediate short term, we are trading above an important resistance point, which was around 17,200. So till the time we are we close above 17,200, we can assume that the short-term trend is positive in the market. And considering the global volatility and the cool off which we have witnessed in India VIX in the last 3 trading sessions, where we have seen a cool off in India VIX coming from almost 23-24 zone to almost 19 odd levels is a indication of some positivity. So my sense is 17,200 is a stop loss for going long into the market on a closing basis. Until we sustain this, I think we can inch up towards 17,600 to 700 kind of trajectory. Keeping this in mind, I think Bank Nifty could see a good contribution to the index rally, because we have a good weight of banking and financials in the overall Nifty constituents, and there we are seeing good strength coming in stocks like ICICI, Axis and SBI, although some weakness is being witnessed in HDFC Bank, and that was the reason yesterday we saw some sell-off in the later half in Bank Nifty. But I think keeping the kind of credit growth momentum which most of these private sector banks are seeing, and if you look at from a valuation perspective, most of these private banks are at 6 to 7% discount to their long-term averages. So that gives us a lot of confidence to create a long positions in stocks like ICICI, Axis and in PSU banking basket stock like State Bank of India.
Okay, all right. Heartening to know that. Ashish, want to also talk about some individual names. The quarterly numbers will start trickling in from next week onwards. But a lot of companies, as is the ritual, they've started reporting their Q2 report card of how the business has been. One of them is Titan Company. Now they've reported an 18% sales growth in the quarter gone by, which is the quarter ending September 2022. They've added 105 stores in this quarter gone by. They witnessed healthy double-digit growth across most businesses. So it sort of gives you a glimpse of what to expect as far as the earnings are concerned. But if we look at both, the business update and the technicals of how Titan is placed right now, what is the sense you get? Because in the last 10 days or more actually, last 2 weeks odd, the stock has cooled off a tad. So does 2593, 2590 levels provide a good entry point, or should one wait for further dip, maybe to add more?
Yeah, so we have a quite a positive view on Titan. So as you rightly mentioned, it has seen a 18% growth in the jewelry segment. Most of the analysts street estimate for full year was around 25% growth. Even if you look at the non-jewelry segment, it is showing a double-digit growth. And if you look at the market share in the smart, I would say, watches segment, it has moved to 2.2%, which was almost 0.5% last quarter. So there is a clear jump in the market share in smartwatches segment as well. Eyewear too is showing a very strong, decent growth. So keeping this all in mind, and if the kind of festive environment we are witnessing, I think Titan is clearly a buy. If you look at technically, the stock has been consistently consolidating between 2500 to almost 2800 kind of trajectory. Keeping this in mind, keep 2500 as a trading stop loss for going long into Titan. On upside, we expect the stock to cross its all-time high and can target somewhere close to 2850 to 2900 in the next couple of weeks. So we have a positive view with 2500 as a stop loss. One can initiate a long position.
Okay, all right. Similarly, even Dabur has given out their Q2 report card, business update. India business is looking steady. It's expected to report a revenue in mid-single digits this time around. International business, however, was strong, expected to post double-digit growth in constant currency terms. So this is the visibility we have right now ahead of the numbers in the next few weeks. But talk to us about Dabur. Are you equally optimistic about this?
Not really, Karuna. So I think there is a gap between FMCG companies and a lot of this discretionary spending. So if you look at the entire discretionary spending pack, whether it's Titan or maybe Jubilant Food, Sapphire, Devyani, or even if you consider some of the names like Varun Beverages Limited, or even in the hotel and leisure segment, we are looking the performance of Indian hotels. There is a clear distinction which is taking place. So I think entire discretionary spending is looking quite promising. But if you look at the FMCG pack, that's where I think some kind of cool off is being witnessed, whether it's Dabur, HUL, or Marico. So I think the only stock where we have some positive and constructive view is ITC at this point of time. One reason, obviously, the stock is at a significant discount to its peers. Second, we are seeing a very strong growth in the hotel segment, in the paper segment, as well as the FMCG segment. And also, one big change which has happened post-COVID was, earlier a lot of these funds were avoiding ITC considering the ESG, parameter. But post Ukraine and Russia-Ukraine war and COVID, there's some change in that thought process, and that's where a lot of money is again starting chasing a lot of these non-ESG compliant companies, and that's why you are seeing such a good move in a lot of these gas companies, factories, coking coal, coal business companies. So that's where I think ITC is gaining traction, and that is our top pick with 320 as a stop loss. We expect ITC to hit somewhere around 380 kind of trajectory.
Okay, all right. Let's keep it with the Q2 updates. Equitas Small Finance Bank has clocked a 20% year-on-year growth in provisional gross advances in the quarter gone by. Deposits have grown by 20% YOY as well, coming in at 21,726 crores. CASA ratio has improved from 45.13% from 45.31% in the same quarter last year. Now it has improved to 48.13%. Talk to us about Equitas SFB. Does it look good on the chart? And, overall, fundamentally speaking as well, what are the indications like?
So yes, so as far as Equitas is concerned, we have a kind of a neutral kind of weighting in this stock, and some short-term upside could be witnessed looking into technicals, but not too convinced about the fundamental parameters of most of these. I would say microfinance companies, whether it's Equitas or Ujjivan, but definitely in the shorter term, some good move of 5 to 7% could not be ruled out. But considering the long-term structure of these stocks are not so promising, I would avoid initiating any kind of fresh long positions. But yes, those who are holding can wait. They can see some short-term upside, and this is probably a sell on rise kind of stock for me.
Okay, all right. And finally, we have some corporate news coming in for Rategain Technologies. Wagner has divested 5.3% stake in the company. They've hived it off for consideration of 167 crores. They've sold 57 lakh shares at a price point of 292 a piece. Rategain's curve in the last 7-8 sessions, its move up has been quite steep. Talk to us about what are the prospects going forward now that it's breached 300 levels?
So it's looking quite promising. In fact, the stock has formed a very strong base around 280, 290 kind of trajectory. Yesterday, we have seen a very strong volume activity, obviously because of this deal. But definitely, it has created a good base around 290 odd trajectory. And my sense is stock is inching up towards 340 kind of levels in next couple of months. So yes, it's a buy at current levels with stop around 290 for an upside target of 340. But looking into the long-term chart, if the stock manages to sustain 340 levels, I think the further possibility of stock moving towards 370, 380 could not be ruled out.
Okay. Ashish, request you to stay on with us. My colleague from Money Control Pro, Khushbu Rai, is joining us. She tracks the paper sector very closely. And that's what we want to understand today on the show. What exactly is transpiring in this industry? Why are the stocks looking so strong? And what are the outlook and prospects going forward? Khushbu, thanks for joining in. Talk to us about the key developments that are taking place in the paper sector. What's happening? What's, spurring the optimism of investors?
A very good morning, Karunya, and thanks a lot. Yes, there have been very interesting developments in the sector. The main development is that the current growth is no doubt led by packaging paper, and the Indian paper industry is passing through an inflection point and is witnessing a paradigm shift from publication to packaging, which is led by rising digitization. As a result, there has been progressive installed capacity growth in paperboard and kraft paper as compared to writing and printing grade paper across major companies. Secondly, the demand and realization for printing paper were influenced by sustained closure of the educational institution due to COVID. But the demand for packaging paper improved on the back of booming e-commerce. Packaging is a very high growth industry in India, and paper packaging segment, which includes paperboard and kraft paper, account for more than half of the paper production share. The segment is growing at a healthy CAGR of 7 to 8%, driven by booming e-commerce and healthy domestic pharmaceutical demand. Also, there has been a revival in consumer durable sales, which has boosted demand. After the government announced a ban on single-use plastics in July 2022, demand picked up for paper-based alternatives such as paper cups, paper straws, and paper bags. We believe that the sector tailwinds such as education reform and ban on single-use plastics could be key impact area for the industry. Another interesting development in the industry is that the export numbers were very good, and paper export picked up and were at an all-time high and outperformed the overall export market. According to Indian Paper Manufacturer Association, the uptrend in the paper export amplified in FY22, as total export volume rose 4 times in 5 years, led by coated paper and paperboards. Our paper exports in value terms soared 80% in FY22. Yes, Karunya?
Okay. Khushbu, I wanted to understand what are the top picks within this space? Which companies look strong from an investment standpoint? Are there any names that our viewers can also keep on their watch list if they want to invest in paper companies?
Sure. There has been recent rally in the paper stocks over the past couple of months, which was driven by post-COVID demand surge as reopening of the educational institution and offices triggered growth. Major investments were seen over the past to increase capacity by leading companies such as JK Paper, West Coast Paper, Tamil Nadu Newsprints, and Andhra Paper. Significant recovery witnessed in the past few quarterly earnings on account of improvement in production as well as high sales realization. While the paper industry has evolved over the past decade, going forward, technological advancement will be vital for quality growth and export. These companies, which are well integrated, will perform better. The backward integration is very important. So, very high capital needs are required for these companies. So, sufficient capacity expansion will determine the best placed stocks. Our top picks are JK Paper, West Coast Paper, Tamil Nadu Newsprint, and Andhra Papers. So, these companies are very well prepared to tap on the opportunity currently as the demand for packaging board grow and will come out as a winner. Also, a comfortable liquidity position coupled with low debt level will enable these companies to undertake new projects in the future. All of these provide sufficient headroom for growth visibility over the long run.
All right, Khushbu, thank you so much for joining us and talking to us about the paper sector and the names that you flagged off. I'm sure our viewers are listening and taking note of that. Thanks again for touching base. Back to the markets with Ashish Chaturmota. Ashish, a lot of questions lined up for you, which I want to pick out one by one. The first one is on BPCL. Vignesh is sending us a message on our YouTube feed. How's BPCL looking now that, we're hearing so much about the divestment update, or actually the lack of it, and technically also, how's the script looking?
So it has performed quite poorly in the last couple of months and quarters, and despite this news flow, which was considering the disinvestment, the stock has been consistently making a lower top, lower bottom formation. But as at current levels, due to the high dividend yield and some cool off which we have witnessed in crude from the highs of $130 odd to below 100 odd zone, although some recovery has picked up in the last couple of trading sessions, but in general, crude is sustaining below 100 odd dollars. This could be create some kind of relief rally into the stock, and the stock has formed a good short-term base around 300 levels. So maybe in the immediate short term, 330, 325 could not be ruled out, but definitely it's a weak structure. So those holding might look for some kind of relief rally into the stock, but I don't recommend any fresh long positions at current levels. But yes, those who are holding that can continue to hold because of high dividend yield and some recovery which can be seen due to the relief rally.
All right. Paul Allen is writing to us and asking how JSW Steel looks on the chart. Talk to us about this particular counter. Last 1 week has been quite upbeat for the stock. Can the trajectory sustain?
Yes, Karuna. So I think here one might see some further strength coming into the stock. Stock has formed a very strong base around 630 odd levels. In yesterday's move, we have seen very strong, volume activity coming into the stock, and clearly the stock is getting ready for 720, 730 kind of trajectory in the immediate short term. So keeping 655 as a trading stop loss, I think stock is poised for a move towards 720, 730, trajectory.
Okay. The next comment, or rather query coming in from Vishwa. He wants your view on Godrej Properties. Now, this one has slipped quite a bit in the last 1 week, but just in the last couple of sessions, we've seen again some pickup happening. Can that pickup sustain, or will it remain a bit sluggish around these levels?
So we are quite positive on the real estate and allied themes. Obviously, building materials is our top pick to play this entire real estate theme. So keeping that in mind, I think one can have a neutral to positive view on Godrej Properties, but that's not our top pick. Our top pick in the overall real estate segment is Oberoi Realty, which is showing a very strong, technical as well as fundamental performances. So I think here one can expect Oberoi Realty to hit a level around 1,050, 1,060 trajectory, keeping 900 as an trading stop loss. But as far as Godrej Properties is concerned, I think it could be a good pullback from current levels towards 1,300 odd trajectory. Would suggest a stop around 1,190. But when we need to understand, this is the one stock which has clearly underperformed the entire real estate basket in last couple of months. So it could be a good relief rally, but when it comes to outperformance, I think Oberoi is going to continue its performance against Godrej Properties.
Okay. The next question I want to address, this is on the IT sector, and of course next week onwards we'll see a lot of earnings also trickling in from all the blue chip companies. How's the sector looking? What is the expectation from the numbers, and overall any stocks you like within the space, large or mid-sized?
So yes, there is a very strong signs of stability coming into IT segment. Obviously, we have a tailwind of rupee, but there are multiple headwinds also. Considering the rising interest rate environment can result in discretionary IT spending coming down, and obviously because of rising wage cost as well as travel costs, the margins of most of these IT companies are going to see some pressure. But the good part is, most of these companies are trading at a 5-year, valuation average now. So they have cooled off significantly. Obviously, from a 10-year perspective, the average PE multiple, which most of these IT companies are quoting, are still 10 to 15% higher from 10-year average. But on a 5-year basis, it has come to a mean level. So keeping that in mind, I think technically also we are seeing some signs of strong stability coming into the entire Nifty IT index, which is currently around 27,928. My sense is it has formed a very strong base around 26,800 kind of trajectory, and on upside, Nifty IT is poised for a move towards 31,000 kind of levels in next couple of weeks. So keeping that in mind, in the large cap IT, Infosys would be our top pick for an upside target of 1600, 1650 trajectory. Would recommend a stop around 1390. In the mid cap, or large mid cap names, I think LTI would be a preferred name, which is quoting around 4,666. One can keep stop around 4,500. On upside, expecting stock to hit 5,100 to 5,150 kind of levels in next couple of weeks.
Okay, just one last question before we let you go, Ashish, and this is coming in from Rohit. He wants your advice on Balkrishna Industries, and given the cool off that we've seen in rubber prices, the sustained momentum in sustained demand for tires and tire stocks as well, what would you say to someone who wants to invest here? The stock has cooled off a fair bit in the last 2 months.
So you can see a clear, behavior of price performance of Balkrishna Industries versus its peers like Apollo, CEAT or JK Tires. And the reason is obviously Balkrishna is a leader into off-tire segment and having a lot of exposure into Europe market, which is not doing so well. And that's the reason, despite, rubber prices cooling off and margins increasing for a lot of these, tire players, Balkrishna has been a clear underperformer. And I think, from a price perspective, maybe some pullback could be seen, but overall, the trajectory is quite weak. If one really wants to play the entire, tire segment, then our preferred bet would be stock like Apollo Tires, which is trading at 272. Can keep stop around 260 on upside. 300 would be my short to medium term target in Apollo Tires.
Okay then, Ashish, thank you so much for joining in and for sharing with us your readings of the market, fundamentally and on the technicals as well. With that, it's a wrap on the show. Thank you for watching.